Massachusetts, Mr. Lynch, for 5 minutes.
Thank you, Mr. Chairman. Welcome, Chair Powell. Good to see you. Thank you for your good work. Chairman Powell, the Senate just filed a bill called the Genius Act. I'm always worried about anything that comes over from the Senate with the title Genius in it. But it is an attempt to provide a regulatory framework for cryptocurrency. And in that proposal, which is similar in some respects to the House proposal, it would allow individual states to oversee issuers, and there would be no central federal authority. The idea is to disperse the responsibility from state to state. My concern, my overriding concern, is that with that spread of and expansion of crypto, and the president is 100% behind it. He just started his own meme coin. He's making a lot of money off of that, which is another issue. My concern is that the spread of an expansion of crypto will infect the traditional banking system because it's a volatile, speculative asset, and we've seen some very sudden disasters with crypto. I'm just wondering, are there any backstops that we can use, any firewalls that we can put in place that might insulate the traditional banking system, because they have access to the discount window and they're FDIC insured, so there may be, second order impacts if we have a collapse of a major crypto issuer. Are there any extra things that we can do to protect the traditional banking system?
Yes. So first, I would say there are really two things that are happening. One is banks are serving crypto customers, and we don't want to get in the way of banks serving perfectly legal customers as long as they understand the risks and that sort of thing. We don't want to single out any particular.
Are you speaking to custody?
Well, custody is more, the second thing is
Right.
undertaking activities on their own, right? And in that case, I do think it's appropriate to as usual, as bank supervisors, make sure that we understand and banks understand the risks that are involved in the activity that they're taking inside an insured depository. On the other hand, you don't want to go too far. I think there were a bunch of disasters, as we all remember, and we don't want to, and we were reacting to some extent to those. You don't want to go so far as to overplay your hand on that. So I think we need to be mindful that many of these activities can very well be done inside of banks, and custody may well be one of them. In fact, in Fed-regulated banks, there are lots of crypto activities happening now. They've just happened under a framework where we made sure that the bank understood and we understood exactly what they're doing.
Right. We also have the example of, Silicon Valley Bank and Signature Bank, First Republic Bank. One of the triggering events there. I mean, obviously the risk management was very poor in that respect, and they got on the wrong side of interest rates. But there were also some failures of issuers who had huge deposits at Silicon Valley, I believe, or Signature, or maybe both of them, and the suddenness of their collapse caused a run for the exits, and luckily with the scramble, we were able to sort of save that situation so it didn't create a greater contagion. But are there steps that we can take that might strengthen our ability to respond to that type of collapse as well?
Yes, so in the wake of Silicon Valley Bank, we did work with many medium and sized banks that had any of the characteristics that we saw. And you mentioned, a long position in long-term securities that was underwater, along with a very unstable deposit base made up mostly of uninsured deposits. And in the case of Silicon Valley Bank, it was a lot of similar private equity and venture capital and hedge fund companies where they all just pulled their money out at the same time. So it was a bank run, and bank runs are very destructive whenever they happen. So we looked for that pattern. We worked with companies who had any aspect of that pattern, and we were successful, I think, in not having that crisis spread very broadly, and that was a good thing. Looking forward, though, we need to not forget that lesson and make sure that funding bases are stable and that we're focused on the basics of banking, which is credit risk, interest rate risk, liquidity risk.
Gentleman's time has expired.
Thank you. I yield back.
Gentleman yields back. Chair